Filing dormant accounts to Companies House? Well, here's some reasons why you shouldn't do that. Hi everyone, my name is Simon Misiewicz from Optimized Accountants, and in this video we're going to be talking about creating dormant accounts for your limited company, which is then filed to Companies House. And this video is entitled Why You Shouldn't Do It. And there are good reasons why you shouldn't. Let's get into that detail. If you want to book a tax consultation with us at Optimized Accountants, feel free to use that QR code and get in touch with us. There is a link onto a website for corporation tax. So if you want to know how much corporation tax that you might have to pay for activities that are in your limited company, feel free to use that. The link will be in the video description box as well. This video is not about filing dormant accounts, but you can get a link to this above me. If you're watching on TV or a device that doesn't show the links, then just type in file dormant accounts and we're right at the top. So these are the reasons why you should not create dormant accounts, and we'll go through them one by one. HMRC states if you are carrying on a business or trade. Well, what does that mean? It means that you are active. The fact that you don't have any income and expenditure yet does not mean that you're dormant. You might be trying to get business from a commercial perspective. Therefore, it's not dormant. You're active in the eyes of HMRC. You might be providing services without an income. You might be working in your business for a client or a customer in January, waiting to be paid in February. Does that mean that January is dormant? Well, no. In the eyes of HMRC, you are actively trading because you're doing work. The fact that you're not being paid matters not. It is the fact that you are going to be getting paid in February for the work you've done in January. So the commercial arrangement is done in January. So if your year end covers January and your trade stays dormant, HMRC differ. Not saying I agree with that, by the way. Earning interest. You might have a bank account that's sitting in there. You might have loaded up some cash for the business to be active, and all of a sudden it gets some money. Now, some money interest, it could be a penny, it could be a pound. That money means that it's now active as a business and therefore needs to be forming a proper set of accounts, not a dormant set of accounts. By the way, don't shoot the messenger here. I am only giving you the reasons of why HMRC states that you should not file dormant accounts. Not that I'm agreeing with any of this, especially when you have no income and expenditure. Management of investments. Again, you could be having stocks and shares, which will have a capital value. So it will have a value on your balance sheet as an asset. The fact you have no income or expenses yet would define this business as active and therefore should form a set of accounts. The big thing for me is, especially for real estate property investments, is people that may try and put in a dormant set of accounts to save accountancy costs, and yet if they filed those accounts, they may have a loss that they can carry forward to offset against their future profits, which can save them tax. So there is good reasons why you should file accounts even if you make a loss, rather than try and save on accountancy time and expense.